Welcome to Lykken on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lykken, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lykken on Lending. Now your host, David Lykken.
Folks, welcome back for another episode of Lykken on Lending. We're honored to have as our guest today, Justin DeMola. He is the president of Lenders One Co-op. It's doing a great job, and the leadership has grown. The co-op is growing, and we're going to get an update on all that's happening because it's important, because he represents so many really active lenders that are doing well, and we're getting his firsthand perspective. Justin, good to have you back on the podcast.
Thanks, David. I truly appreciate being here.
What is the latest news from the Lenders One Co-op?
What's not the latest news?
Yeah, there's so much. There is so much.
We're sitting here on November 20th.
Yeah.
Credit pricing is out. All of the members are panicking, and the whole world is going, oh my God, what happened with credit prices this year? And obviously there's been increases. That's the challenge today, just getting through those conversations. And I think people are understanding where it's coming from, how we got here, and what needs to happen. But yeah, that's what's going on today.
That and a lot of M&A, where mergers and acquisition is alive. And how is it inside of Lenders One? Are you seeing a lot of the members starting to come together and say, hey, let's partner up?
Obviously, there's the big ones that we saw over the past few months. And where we're seeing some of the smaller ones, guys doing $1 billion a year of originations. We have one right now that's merging. 3 companies are essentially merging together. So that'll get them to a $3.5–4 billion a year company. But people are talking about it. Everyone's a buyer until they're not. Right. So that's always a good conversation. And I'm sure that a lot of them want to buy. And then all of a sudden they're being acquired. Obviously, we've seen some consolidation within the cooperative. Most of the consolidation we've seen has been member to members. So that's always good for us. We keep the volume in the cooperative. But yeah, people talk about it, but people aren't really talking about it if they're on the selling side.
Yeah, I think there's a lot of activity. There's going to be more activity as we continue to go through this rate. I'm going to call it uncertainty, and we're all hoping. We have a lot of optimism about the future. Let's talk about that. There seems to be optimism from the people I'm talking to. What are you sensing within the co-op?
Yeah, 100%. I think a couple of years ago when rates spiked up and origination slowed down significantly, people were overstaffed, wasting money. We're seeing numbers from the MBA that there's more profitability per loan by quarter.
Yep.
I think the IMBs are getting through it. They understand that this is the market that they're in, and how do you succeed in the market that we're in today? Yeah. And we just came back from Nashville with 25. Right. Yeah, we were in Nashville last week for a roundtable. 25 lenders were with us, and all C-level executives, and they were all positive, right? They're looking on, how do I invest in my business today to become more efficient, to prepare myself for when the market gets busy again? And how do we use technology to create those efficiencies? And again, we all know that people adopt technology or purchase technology but don't adopt technology the way they should. That was a big part of the conversation. How can we, as a group, help our members really understand what the technology is that's out there, what's available, and how to make the best choices to adopt it and get your users within your organization to use it?
Yeah, you are doing a good job with bringing the members together and creating these conversations. That's one of the benefits of being a part of the co-op. And I would like to get into that a little bit. Tell me about this meeting you just had and the value of it, and why anyone listening to this podcast that's not a member of the co-op, Lenders One Co-op, that they should be. Talk about this event you just had and what's the purpose of it, how it comes together, kind of what goes on there.
Definitely. So we do 3 roundtables a year. So it's capped out at 25 participants, generally C-level executives, maybe 1 level down. And it's a 2-day event. And the first day is literally starts at lunchtime, ends before dinner. Then we all go to dinner. But it's literally 5 hours of sitting around a U-shaped table, talking about the challenges that our members are facing and how can we help them and what are they seeing. And the topic can go anywhere. We start out by going around the room, introducing ourselves if you don't know each other. And really the question for the group is, what do you want to get out of today? What do you want to learn? What do you need help with? And we spoke a lot about AI this past week. A lot about
it's dominating all conversations, isn't it?
100%. And we were bifurcating it into AI on the sales side versus AI on the loan manufacturing side. And we had Ari Karen and Daniela were in the group. They were actually the moderators for day one. So,
they moderated this one. Okay, good.
Fannie Mae previously moderated them for us. Fannie Mae is not able to do that under their current arrangement right now, this very second. So Ari and Daniela came in. And
great. I love those two. Those are great people.
They are. And what's nice about them is they're not selling. So I can't just have any vendor come in and try to sell for 5 hours. They're truly moderating. And the members are excited because they can get in front of them and not be charged for some free advice.
Everyone's looking for some free legal advice these days. That's right.
Yeah. So obviously we were talking a little bit about what's going on in the world in terms of some of the legal issues that Ari and Danielle are seeing, but we're really dug in deep on the AI, right? And on the sales front end of the AI. What are the legal regulatory compliance issues that are potentially pitfalls for the adoption of AI? And you're really talking about what's a licensed activity versus a non-licensed activity. What are the rules around identifying if someone's talking to some AI chatbot or a voice bot? How quickly do you have to notify the consumer that I am a chatbot, right? That you're working with, right? You have your TCPA issues. So there's a lot of other issues outside of just the mortgage space. It's do not call TCPA. You have your licensed activities, right? If you have someone who starts an application online and they have the ability to ask a chatbot or a live voice bot a question about a loan, many states are viewing that as licensed activity. So
hearing this, and that is increasing.
It's scary too, right? Because we're in uncharted waters completely. How do we get around it? What do we do? There needs to be new legislation that says, yes, you can do this, or no, you can't do that. And if you are using these chatbots on the front end of your system, as soon as it gets itself into a situation that it can't answer, that it can be crossing that line, it needs to say, hey, by the way, let me transfer you to a live individual or to someone that can help you. I can't help you. Don't have the authority to answer that question or help you with that. Something around those lines. There's a lot of pickups. I do believe you look at some of the AI success stories out there. I know a publicly traded company in their earnings call was talking about 400,000 calls that they made, and they generated this many loans for their TPO originators. I think you have an issue there too. So there's a lot of issues with AI today.
Yeah, there's a lot of people whistling by the graveyard in this one. It's getting to be more and more complicated, and it's very important. But this is one of the benefits of being a Lender One member. You are now getting a chance to talk to your peers, talking with a leader like Ari. I love Ari. Ari and Danielle, they've got great experience, and they have defended and worked as legal counsel for most of your clients. I believe most of your members at one point in time or another. What you mentioned earlier about credit lines and the credit news, you touched on it. What's up with L1 credit, and what's happening generally in that space?
So it's an exciting space for us. We are growing it very nicely. We just brought on a very large top lender, saving them well over $1 million a year in expenses for 2025 costs, and we expect 2026 costs to be even more significant.
Are you $1 million?
$1 million. We actually have one that's a very top level lender that we've made a proposal, and we're saving them over $3.5 million. Yes.
Wow. That's a significant change in these tight margin markets.
It is. And again, we're excited about it. We have a lot of members are adopting Lenders One credit. What we're seeing is members that are joining Lenders One today, most of them are signing up for one of our services. We have over 60% of those people are signing up for credit and membership at the same time. And we haven't had enough timing to check to scale how quickly they join credit for the 40% who's not, as opposed to the legacy members where we have, call it 25% of those members that are purchasing products and services from us. It's a great time for us. We're really excited about the opportunity to create savings and value for our members, but also give them different solutions and different product sets to save money. Maybe it's not the base cost. Maybe it's changing a workflow here or changing a workflow there. And our members are super appreciative. They love the consultative approach. They feel like technically our members are owners of the cooperative. So they give back to their organization, which is great.
Yeah, that's really good. We've seen the MBA come out with their position. I'm interested if you wouldn't mind sharing your thoughts on the MBA's position on
which position? Single bureau or
single bureau? Yeah, but virtually the whole space of the credit. Yeah. Start with single bureau.
Well, let's start with status quo. Right?
Yeah.
Status quo, the credit reporting space and the credit reports used to underwrite and close a mortgage loan have been working for 40 years.
Yes.
Our markets love stability and predictability. And I'm not even talking about repayment right now. I'm talking about risk. And yes, we see FICO score prices coming up. We're seeing credit prices coming up. I will go out on a limb and say, not only is it the foundation of every loan, probably the most important of the C's, the credit, collateral, cash, that you need to close your loan. Because if you don't have credit, the waterfall doesn't work. I don't care how much money you make or how much cash you have in the bank. So I think when we look at the credit report, it is invaluable to what we do today. Getting back to stability and predictability. I think we can get to a different model, whether it's VantageScore. Good. I think VantageScore is much faster than single bureau or even bi-merge.
Yeah.
But I think we need to get there in a calculated, measured way where we can actually see the progression from one to the other. The ultimate decision maker in our space are the bond purchasers.
Yes.
And if they don't know how to measure risk, we're going to save a borrower $100 on a credit report, but they're going to pay thousands of dollars more in interest or MI costs or whatever that is. So
whatever the insurance.
I support what's best for the homeowner and home buyer overall. And again, upfront costs, yes, they've increased. There's no question about it. But what does it look like? Yeah, significantly. What does it look like on the back end, though, if you're using an alternative method, whether it's a single bureau, VantageScore? I think VantageScore is going to be great. I think it's going to offer a lot of new homeowners ship into the market. But again, I don't think it should be used to offset the cost of FICO. I think they both are going to have their place. And I think over time, you're going to see Vantage probably overtake FICO, but we need to get there first. We need to get it accepted. We need to be able to track it, watch it, monitor it. And all the other lending industries, whether it's auto, personal loans, credit cards, they're all moving to Vantage primarily, right? Yep. So I think we're going to get there. But my biggest concern today, if you ask me about any knee-jerk reactions or abrupt changes, is it's going to disrupt the markets, and the markets aren't going to know how to price those loans. Whether it's for duration, whether it's for credit risk, you're going to have an issue.
Yeah, great point. Also, another successful area within Lenders One is L1 Insurance, homeowners insurance. You have helped so many lenders mitigate the rising costs. You saw the slide that the MBA put up. It's the single biggest spike of any of the costs out there. How have you been able to mitigate that and help manage that for lenders?
Yeah, that's another fun one. It was a project we started beginning of last year.
How fortuitous to do that. You started thinking about it, everyone said, they're just trying to make some extra money on that. It was fortuitous that you guys would do this because it's created significant savings.
Yeah, exactly. We had our Castle Line insurance group, and we're sitting in it was actually in one of our advisory council meetings where people started talking about insurance and what type of insurance solutions can we provide to the cooperative. And, we went out and made sure we had all of our property casualty licenses in all 50 states. And we teamed up with an individual powers the back end for us, but we are a fully licensed agent, et cetera. And we are working with our members, and we've established technology that we're getting their borrowers whenever they want to send them to us, whether it's a milestone or a status or what have you, but we're getting their borrower's information. We're connecting with the borrower. We're showing them 3, 4, 5 quotes, depending on region that they're in. We have 40 different underwriters that insurers that can issue and bind policies. And we're really starting to hit our stride with that product right now. And it's exciting. And the members are happy because it's seamless. They can control the transaction. It's also giving their borrowers, creating additional value for them because it's giving their borrowers some reduced costs, and it makes the lender look good.
As far as AM Best is ratings,
we have all the major insurers.
You got all of that.
Yeah, whoever you need, we have. So
that's really good. Let's talk about the benefits of membership. It is a great organization. The conferences, we're going to talk about that in just a minute. Fort Lauderdale's coming up in March 1st through the 4th in 2026. Really looking forward to that event. But there are so many benefits of the membership, but there's just nothing like the camaraderie. And what you're doing with the roundtables, what you're doing in the ability to bring people together and hear and share each other's issues, that is, in my mind, the biggest benefit. But talk about it from what you're seeing. And then are you looking at adding additional benefits?
Yeah. So we have, again, we're always looking to, when I look at the strategy going into every year, it's more members, more products, more penetration of the products, and then the flywheel just keeps going back. The more value we create, the more members we get. And thankfully, I'm empowered to create whatever products that are going to make sense for the membership. Our CEO at Altisource is very supportive of everything that I do. Obviously, we got to present to make sure it's economically feasible,
right,
et cetera. But anything that we believe is going to be of value to the membership to meet our mission of helping our members save money, earn additional revenue, have best insights, be more efficient, et cetera, I have full support of. I get full support of. When we look at everything that we do, I say it all the time and people laugh at me until they live it. Like, I was a member. We were engaged members, a long time ago, and we were an engaged member. And the more you're engaged in anything that we do, the better your return on investment is going to be and whatever value you're seeking. We look at all the different things that we offer, and it's not a one size fits all for every member, right? It's not like I'm going to come in and this is what I'm going to use. Yes, credit, we found a really nice, stable product that every member can find value in, but there's plenty of other products that some members find value in and some members don't find value in. And one of the things that we do, and I think it's a perfect example, is we give free continuing education to all of our state licensed independent mortgage bankers.
And you need to stress that because that is such a value.
Yeah, we did over 6,000 individuals last year, individual MLOs, something like 18, 19, 20,000 individual state classes. That was fully free. Cost us a significant amount of dollars to be able to offer that to our membership. But that's a value to IMBs, not all IMBs, but it's a value to IMBs, but it's not a value to our bank and our credit union customers because they don't need the state licensing.
Right.
So they don't need the continuing education. That's one of the things we look at. Having the ability to sit in a room with our members and our members say, hey, can you develop X, Y, Z? Or what can you offer? Can you go find this for us? Can you go find that for us? It's great. We've had health insurance for years, right? We look at our national programs providers, right? Our products and services that we team up with third parties to offer savings, discounts, or contractual relief to our members. We have 75 different companies there, right? From technology companies to compliance companies to you guys, right? It all depends. Then we have our direct solutions. I run our title, our valuations, our outsourcing group, essentially our vendor management group, our insurance group, and Lenders One. And obviously title and valuations, I share P&L with our operator on that. But again, when we look at all the products and services, those are things that we can give direct to our members, right? We have our granite construction management, we have our renovation group. So we have plenty of things at the Altisource level that creates direct value for our members. And that's why we started Lenders One Credit. Then we have our capital markets, we have our preferred investors.
Talk about your capital markets, because that's been such an important one for some. That has really helped some lenders.
Yeah, our members get dividends, right? So our preferred investors who are on the platform, lenders close loans or sell loans, close loans to them. We get paid dividends. We split that back with the member. We have our sub-servicers, our warehouse lenders. We pretty much have anything and everything that a lender needs to operate and operate more efficiently and more profitably. There's a ton of tangible ROI. So I break it down. Tangible, we look at our direct services, our reseller services, our capital markets, our national programs. And then we have our networking and events. And that is something that really builds the culture of our organization. I like to think that we are the highest level as it comes to professionalism out there. Our members respect each other. They share a ton of data. They want what's best for each other. And it's always fun to watch the first time someone comes to a roundtable or sits at a networking group, whether it's our monthly calls or bi-monthly calls or our summits. But it's always great when a newbie comes into a roundtable situation or a networking group and everyone is talking so freely and they just look around and this is my competition, but they're telling me all their inside secrets. And it's something that we really work hard with.
I've witnessed it firsthand. You guys, they really do open up. And there's several of them calling me and said, Dave, I couldn't believe it. I'm dealing with so-and-so. And he's like a crosstown rival. And they're just opening up and sharing. It has created a bond between us that I can't begin to describe the value of it. And we share things. We are now more respectful when it comes to recruiting out of each other's shops. And
I will tell you, I've been here for almost 7 years now. I think there's only one legal dispute between the cooperative members that I could remember. And it had to do with stealing pipelines. But that's more loan officers than C-level executives. But you know what? They figured it out. They worked it out together and it was great. But Yeah, everyone is very respectful of each other, and they have conversations and they communicate, and I think that's the most important thing.
Yeah, that's what it's all about. We get together, we communicate. Talk about the size of the membership. Again, under your leadership, this has grown nicely, in spite of the M&A.
Yeah, it's always a fun battle, right? We're always just like the homeowners insurance business, right? You got to, renewals come and you got to fight attrition. And we're controlling 17, 18, 19% of the U.S. mortgage market at this point.
Wow.
So we're somewhere around 240 members. And I will tell you that every year we're adding positive net members. We were down in 2021-ish. I think our membership was probably the lowest it was in a long time, but we're growing it back. And again, we have a lot of people that are interested. We're also selective on who we bring in. It's not you apply and pay a fee,
right.
and you're in. And we do have some requirements, and the members also have to vet you, right? We send out a notice to all the members, hey, David Licken wants to join Lenders One. Do you guys have any dirt on them? And sometimes we get that too. It's, oh yeah, he's horrible or they're horrible and you don't want to bring them on. It's not good for the cooperative. When we look at it, and then we're tracking attrition, and when we track attrition, 95% of it is mergers, acquisitions, or companies went out of business, or we've even had companies that scale back to mortgage brokers. And once you're a mortgage broker, you can't be a member as well.
We're seeing a surprising amount of that, actually. That's kind of surprising to me.
It's a cycle. It's always been a cycle.
Every time we go through one of these cycles, it is such a cyclical business. It's so great point. Let's talk about L1 Summit coming 2026. It's in Fort Lauderdale. Great place to be. Wonderful town. I love the place. We've been there before. I love this place. Talk about it.
So this is a brand new hotel. It's actually opening.
Oh, it's a new hotel.
Brand new hotel. It actually opens December 18th. So we did a site. The team did a site visit a couple of weeks ago. Said it's absolutely stunning. It's gorgeous. It's an Omni hotel right next to the
beautiful,
right next to the cruise ship pier in Fort Lauderdale. We have some really cool night events that are going on. Obviously, for those of you who don't know, Lenders One Summit is definitely interesting. There's no lobby rats, I like to call them. Everyone that's there is registered from Sunday night to essentially Wednesday morning. Corral everyone, free drink, free alcohol, free food, and the events are very memorable. So it's all about building culture for our providers and our members together. And it's super exciting, and looking forward to the nice warm weather as it's 30 degrees outside today.
Yeah. I just came off of a British Virgin Islands cruise, so I'm
rub it in, Dave.
Yeah, I know. What can I say? Justin, it is just so good. First of all, congratulations on the leadership you've brought. You're doing a great job there. And so many members have commented about the job you've done there. You came out as a member, then you went into sales, and then which I was an advocate for, and then I was an advocate for you to get into the role you're in. I'm really pleased to see how it's gone.
Yeah, I made the move out of the origination space and was leading sales here, and opportunities opened up, and like I said, I earned it as well. But everything worked out the way it's supposed to, and having some fun. Yeah,
good job. It's good to have you back. Good to have you with us.
Yeah, great seeing you. I'm happy everything's going well in your world. You're going on British Virgin Island cruises, and wherever you're going.
Well, you know how it is.
Fancy dinners.
Yeah, there's been a few changes in my life, so it allows me to be freed up to be able to do some things I've always longed to do, and I'm doing them, man. I'm taking full advantage of it and doing it.
I love it. Enjoy, my friend.
Great to have you here, Justin. Thank you so much. Appreciate you, brother.
Thanks, sir.
You bet. I hope you enjoyed this podcast. It was made possible by our sponsors: Byte Software, First Close, Angel AI, True, Candid, Mortgage Bankers Association of America, Lenders One, who we just featured, Modex, Rudder, Mortgage Advisory Tools, and Fuel. Have a blessed day. Look forward to seeing you back here for the next podcast. Thank you.
You've been listening to Licken on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Licken on Lending.